Hello guys, welcome back to this video. So I'm going to give you a trade breakdown of a top-down analysis of a trade we took today. So this is the trade. This is where it hit TP, NZD USD. TP smashed 1 to 3. So I'll explain everything the way I explained here. This is where it all started. So what did I say? Daily time frame has experienced a change of character. So we are back to being bullish again. 4 hours range has not taken the fractal highs for buys, but we can get early entries since 4 hours is already taking highs of the previous 4 hours candles, so we can take early buys. Now how do you take the early buy? You can take the early buys upon the 15 minutes high being taken, or wait for pullback to the order flow below, though the order flow don't look high probability to me. That is the time I shared all this. So let's break down to the point where we reached here and then we again reach TP being smashed. So let's go back to the video and start explaining the thought process. Now what I need you to know is that if you are watching this for the first time, you need to know how to interpret 4 hours fractals. You also need to know how to interpret order flow. You need to know market structure, just a pull high, high, low, like that, low, high. And then you also need to know what is inducements, major and minor. You can know, just go deep and know them. Then basic supply and demand, and then just know single candle order block. All these are within the channel. By the time you are watching this, if it is past 1 month, I have 40 video list of explaining all the SMC concept. So these ones are all included, others are already uploaded. So just check in the channel and you are going to find one explained in detail, like order block and order flow and even fair value gap. All are explained in almost 50 minutes video with thorough examples and a trade taken. I don't just explain, I explain using 3 or 4, 5 trades we took, and then I explain them using the concept I'm explaining that day. I don't just cherry pick here and there. Now, so the SMC strategy is very simple. We look for external range. So I'll explain this, but let me walk you through what happened. NZD saw a push causing breaks of structures up here and maybe changing character to some extent. This was like a change of character. When this high was weaked, it was a liquidity sweep. It was a liquidity sweep. Why? Because it never sustained this move on a daily time frame. So I'm doing a top-down analysis. So eventually it came back, caused a break of structure, but this break of structure equally did not sustain, making it a sweep, and therefore this was now a successful break of structure upward. So we got some push down, push up, push down. Then we saw a break of structure upward. Here was a break of structure again, we got a break of structure. So when this time frame here, let me bring it closer. So what happened here? We got a push down, push up, push down, push up, push down, push up, push down. Instead of causing this, it went causing eventually. This was the first change of character here. This was the break of structure, push, break of structure downwards. But again, if you check here, we realize that the market came here, pushed upward, then pushed down. Why am I marking this and they may look weird to you? Is because this is 1 day time frame. If you go to 4 hours, you're going to realize that this thing played exactly the way like this, because these ones are just push down, these are pullbacks, these ranges are pullback. Like I said in my previous video of trade breakdown I just made, if you've not checked, just checked it. I explained, I introduced some concept some concept called RIMC. The concept is called range, initiation, mitigation, and continuation. That is how all market move. All market moves like that. We have a range here. We have, let me just explain here. We have a range here, an initiation, and then we bring a mitigation, then we hit a continuation. Again, range here, initiation, mitigation, continuation. Continuations are always very long, and that is why I only look to trade ranges and continuation. So again, we have a range, then we begin to have a range, then we initiate. And then again we try to mitigate, but eventually we just start forming range again, then we initiate, then we mitigate, then we initiate. So again we come back here, we mitigate, but we fail to. That is why I don't like trading mitigation. We mitigate, but we don't sustain the initiation, the continuation. So again, this turns now to, this now becomes the range, the initiation, because of what is called change of character. So once we see this change of character down, this becomes our range, initiation, mitigation, continuation. So again here we got a range, we got some initiation, then we got a change of character, then we got, now this becomes, if we got a change of character, this becomes our range, initiation, mitigation, continuation. Again we have a range, then we have initiation, then mitigation, plus continuation. Now with that in mind, this becomes eventually a confirmatory. This was just a preliminary. This is now confirmatory that this was the most protected high. This could be liquidity, but this is a confirmatory that at any point from now, you may see now the daily taking this high here as the target. So we now need to go to these particular points and now start marking. So yesterday, this was the yesterday candle on a daily time frame. We mark external range marked in 1 day. We just follow what the day is doing. So we mark the high and the low like this. So after marking the high and low like this, this is the daily candle yesterday. So it closed bullish. What do we expect? We expect a we expect a buy. If it closes a buy, this is the next target. So then it pushed down, which was very good. So we're just expecting it to continue. If it closes on like this on the below side, yet the market has already changed character and we are initiating, this is pullback. Just like this, this is pullback, this is pullback, this is pullback. Now this is pullback that now takes change here. So that is why you see it continued a little bit. So let's go back to today's trade. So we've already marked, this is the checklist I always used in all my videos. Just check, you will find it is just one checklist with very minor tweaking. I've never tweaked it, by the way, because the only thing is, the only part that is remaining is subjective. So after marking the daily high and low, so we are trading within this range from here to here today, which is on Thursday. Now next next we get internal range in 4 hours. So let's check if 4 hours is already buying so that we can buy. If it is selling, we just ignore it, like whatever is happening in gold today. I marked it somewhere, I'll show you. So next, where is our checklist? I have to move with you. So let's now proceed. So let's mark this. We have to mark this our daily high. This is our target of the day. Target of the day. As you can see, the target of the day has already been hit because our TP has already been hit, but I'm just doing a trade recap. I'm doing it for people who follow me in the Telegram here, and then also for people like you who wants to watch new things that are not common in the internet. This strategy, I don't think if you've seen anybody trading it, so I'm hoping to see more people embracing to do if you're a day trader. I also know how to do it in terms of swing, but that one I'll share later when I start trading swings. At the moment I'm a full-time day trader, so when I start trading swings, the same strategies, it is there for swings. Now let's mark the daily high, which is our target of the day today, and this is our low. This is our daily low. So what happened overnight? Overnight we can see that 4 hours, from 4 hours perspective, using the range marked, 4 hours sold, and then now it started breaking highs. What does that tell you? 4 hours is now back to being bullish. So even if we leave it at this particular point, you can see that 4 hours is back to being bullish again. It means 4 hours just want to target this. That is what 4 hours wanted to do, to trade the initiation, so the continuation. So what happened in 4 hours in daily time frame? We had the range. This was the range. This was all the range, and then we had the initiation, very aggressive. That is why yesterday we were only looking for buys, but I was looking on sells on opposite pairs. I have opposite pairs here, USD JPY and USD CHF. I was looking on the opposite side and I got very good trade. So you make sure you watch it out. It is a very good trade. Let me show you here. I'm going to do a breakdown of that video eventually. Yeah, this is the video. So this is the trade. There are 2 trades here and all of them smashed. 1, 2. This is on yesterday. It is written here yesterday. So today is Thursday, yesterday was Friday. Today is Thursday, yesterday was Wednesday. So this is the trade. Took 1 to 6. This is 1 to 6. As you can see, TP was smashed. TP smashed 1 to 6, more than 1 to 6. I'm going to do a trade breakdown immediately after this video. So if you see this video, just know that the next trade is that. So 4 hours is already moving upward. With this break, this confirms that 4 hours is back to being bullish. Just simple fractal nature of the market. So ideally, if we are to remain bullish, then this would be the 4 hours fractal target, and this would be the 4 hours fractal, because there are no movement inside here. Otherwise we would have just had 4 hours fractal within this movement, but since we don't have movement here, it is very aggressive. Like I said, this is range, this is range, this is the range where everybody is clobbered, and then this is the initiation phase. This is the initiation phase, very aggressive. If you want, if you try and get aggressive on ranges on this initiation phase, then this is now the mitigation. It went up and then now immediately came to mitigate, and now this is the again continuation. See the way they are very aggressive. So that is why I only look to trade this and not mitigations. Just cluttered, but if you check 1 hour and 15 minutes, they are very clear. This is let's give it black also. Let's give it black. So there was a mitigation immediately. So that is what happened here. Even this is now coming to mitigate. So this was range, initiation, mitigation, continuation. Simple. But don't mind if you don't know how RMC work, that doesn't matter. That is why I simplified it into daily high and daily low, 4 hours high, 4 hours low. I'm just explaining technicality of how this strategy came to be. So this becomes my fractal low. This is heavily protected. If we take this, we should be selling. The market is back to pullback. This is heavily protected since it has started breaking these highs. It is heavily protected. So this becomes our 4 hour low. This becomes our 4 hours high. This is where the target is. This is where the meat is going to end. This here, now we call it 4 hours high. Now do we get early entries? Because immediately 4 hours start to break this. This is initiation phase. It is always very impulsive and aggressive. So we've already seen that the market has started taking fractal highs and lows. This is the correct fractal. This is the ideal overall fractal. This is the ideal overall low fractal. But the market has started taking individual candles, and it will proceed like that. So these are just pullbacks to take more liquidity, because these initiation legs also have liquidity points, and that is why we are not scared by this, because of the next thing we wait for. We monitor order flow in 15 minutes time frame and IDM zones. Now, where is my checklist? We are almost done. So what do we see here? What do we see here? Now let us monitor order flow in 15 minutes. Monitoring order flow in 15 minutes is so easy. Just check from the origin where we started moving, where the fractal, where price started seeing fractal alignments. So this is our last break of structure. I don't call it break of structure because it never did anything. It because break of structure had internal structural liquidity, or IDM. This was the most protected high in 4 hours, but what did it do? It failed it. When it failed it, we don't call it a break of structure. It was a liquidity sweep, and therefore this becomes a break of structure, or a change of character upward. So this is where 4 hours started aligning from bearish to bullish. So even if it pulled back to this point, this was still high probability order block, order flow, sorry, because the only problem is that we didn't have IDM here, but at least it took IDM below here. Check my video on high probability order flow, you will see. So upon tapping here, we expect it to move. So to move, we see a second break of structure up. We see a second break of structure upward. Now if you hear noise, just know that I don't stay in the bush. As much as I may wish that children don't make noise, just know that I don't stay in the bush, and that is why you are seeing you are hearing those unnecessary movement. Now this is the current reason why this price is moving upward, possibly moving upward. So this is, now let's proceed. So I need to monitor order flow in 15 minutes and identify. That is what I'm doing. So I will only enter if I see second 15 minutes break, because we can take this break and then push down. So I need to see second break, second alignment. So that is why this broke here confirmed that now we are back to being bullish. Finally the market is continuing. So you can take aggressive entry, because this was the first one, and then we got another second break here because there was a push down here, and that is why this held. So let's narrow down a little bit. If you look at here on valid pullback, that is why I said it's good to learn valid pullback. We saw a push, and then there was a doji candle here, or what is called IFC candle here. This was, if you go to lower time frame, this is a push down and then a break. That is second break, and then after second break this becomes an IDM point, and that is why this here held to push upwards. Now with the same thoughts, as you can see, this became an IDM and then it pushed upward. Only if you know valid pullbacks. If you go to lower time frame, like 3 minutes, 4 minutes, 5 minutes, you are going to see that this is a push down, then a push up. Now, so the same thoughts have confirmed that now ideally, correctly, and it is very explicit that we have second break. So I know this is initiation move, So when London open, we see a push up and then a push down. So what was happening is I was really waiting to see this break happening, something that did here, this break happening. So immediately this break was happening, this break happened. What did I do? I came in the market. Actually, this is the time I started shooting. I started giving the analysis out, our daily today analysis, with the people in that Telegram groups. Most of them I don't know them, but I just feel nice to be documenting how I trade here. So what I was expecting is two options: either this to become liquidity point, this here ADM, and then we see something that happened like this, somewhere around this high probability order flow here. This is high probability order flow. Actually, it's when I'm even further noting I was in a hurry because I came to the chart late, because you can see a push down, a push up, taking liquidity here. This was a taking liquidity here. There's another one here, there's another one here. So it's high probability anyway. So upon tapping here, I was expecting, or somewhere around this region, I was expecting to see a scope and then buy the market. However, not in most occasions the market happens like that. So you have to be you have to be a little bit flexible to know that the market does not do what we want all the time. So when I saw this break, I just decided to take an early entry, knowing that what I was inspired with is because we can see that all the laws are being obeyed. So this law should be obeyed too. I've already explained the same trade, the same day, almost same time. So this 15 minutes law should be obeyed. This should not be taken, ideally. So if it should be obeyed, we go to 15 minutes to 5 minutes, sorry. Now I'm just on the entry part. So immediately I saw this close here, I entered. This was too aggressive. I don't recommend like that, because I wanted to look at also Euro USD. That is why I think I got it at 6.8 pips, a little bit there. Target at least a 1 to 3. It was a 1 to 3. It was lesser than that. It was around there, about. So I was expecting a reaction to come and push this, but immediately I didn't see reactions. I just entered. The correct thing to do was to wait for pullback here. Eventually in 5 minutes pullbacks happen, only 15 minutes that pullbacks don't happen. So there I really disobeyed my rule. So that was the area under which I took this trade. This was the region, and then there was the stop loss around 6 point something pips, and then this was the take profit there, about something close to this. So the correct way was to wait for this pullback and avoid being this liquidity. If you want to avoid being the liquidity here, what do? You wait for price to give you 5 minutes scope upwards. It means it is respecting this low, and therefore then the correct entry would have been to avoid this heavy drawdown, to see that scope forming immediately that 5 minutes closed upward. That was the right entry. You can place your stop loss here, but it will be so risky, so just place it down here very confidently, and then target at least a 1 to 3. So like in this case, it would have not entered. But if you waited for a pullback, I think it entered. If you waited for a slight pullback, because this is the overall target, so even if it doesn't hit here, you can be trailing your stop loss. If this place is not a 1 to 3, you can be trailing your stop loss closer, because this is the overall target. So it means if it trades here, there is high probability that it will try and look for it will find what do we call them, sell limits here. So if it finds sell limit, that means this will be the buy side liquidity for the ICT traders, so it will try and pull down heavily. So what happened, this is how the market moved. So we got some push, and then there we go, take profit was smashed. So I don't know if this hit TP, I don't know if it hit TP, if it was gotten there. Yeah, so probably it must have hit TP because this was the maximum stop loss. So price went so there about, I don't know, depends with where you took it. If you waited for some slight push down, you would have gotten a 1 to 3. So this is how I got it at a very heavy drawdown. I don't like this heavy drawdown is not my cup of tea. I don't like it like that. I like it the way I took it on one day on this Euro USD sell, this here, and there was minimal drawdown. I don't like drawdown because my stop loss are very tight, so it is either I'm wrong or I'm right. So this came nicely, tapped me in, took it somewhere there. Upon tapping in, this was also another confirmatory when I got this break of structure here. So I got this curve here, this 5 minutes candle closed above here, that was curve, and therefore was very eager to wait for it to push back. When it pushed back, I took an entry, and that is how I was able to get my trade.